Good evening, everyone. This is Srikanth Rajan, and welcome back to Market Pulse video that we do every Sunday at 7 p.m., where we discuss what happened in the market last week and what could be expected the next week. So, the first thing, of course, we need to talk about is the big fall that happened in the Indian market thanks to all the fear from the electoral bonds. Well, there was news that electoral bond details would be out, and just before that day, we could see big fall in the Indian market led by Reliance and Adani. And basically, if you see most of the stocks of Adani and Reliance was falling on the day, and the markets just fell as if there was no end. And that looked like a major crash and like a major turnaround in the Indian market, breaking that important support zone of 22,000 in the Nifty. But then the next day morning it recovered after the details came out, which did not show any signs from Ambani or Reliance or Adani. So that way we could see the markets recovering and still struggling in the same segment. So around the same 22,000 mark at this point of time. So what is happening in the market is basically that in India specific news, which actually led to that fear in the market. But now the markets have come out of that fear. So as discussed in the last podcast, if you have listened to it, I don't see major downside from this level. So this is a time when we also have the election dates announced, and if you see this time, the election counting is kept on June 6th. So till June 6th, markets are going to see volatility, and markets as of now are expecting a very strong government to come. But elections are elections, just like stock market, we can never predict. If at all there are some changes, we could see big movements in the market. That is the time I would kind of stay away from trading, just to avoid any kind of risk. So at this point of time, well, this week was good for me in terms of trading also, though we had some, testing moments on Wednesday when the markets fell big. But then Thursday things recovered and we were back to safe position and come out with a decent 0.75% return for this week. So that's about trading. Well, I don't want of course, and I don't want to encourage people for trading, but then of course, long-term investing also. If you see, people who have gone into the daily SIP with us are sitting with some decent returns at this point. Now, should be happy. New members who started with the daily SIP must be happy the way the markets fell, and they could take benefit of the daily prices. So, well, that's a special thing that we do at MPI Invest, a daily SIP where you can invest as low as rupees 500 per day into a mutual fund every day on auto debit mode and make benefit of the daily market levels. So if you want to do that, do schedule a meeting with us at our website mpiinvest.com, or of course you can even WhatsApp on the number given in the link, and you can also join our broadcast group, WhatsApp broadcast group link given in the description of this video to join our community there. So well, that's something I should keep aside. So talking about this last week, we could see heavy selling by the FIAs. FIAs have sold big, and DIAs have tried equally to cover up all those selling. But then one very important thing, this week, if you see on Friday, US markets have actually fallen. So US markets fell after Indian markets closed. So that effect can be of course seen on Monday. But then I don't see a major downside again, because on Friday the US had a quadruple witching day, which is the day where all the index futures of stocks as well as stock futures expire on the day. So because of which the markets can be very volatile, and especially in the US where the retail participation is more than 50% of the population, the markets can go jittery. So we could attribute Friday's fall to that. But then, however, it's very important to see how the market reacts this week in the US, because in India we don't have any major Q for this week. But then the major Q would come in the US, because if we have the Federal Reserve Chairman Jerome Powell speaking on Wednesday evening Indian time. So if you see whatever data has come, the CPI, the PPI data has not been very favorable for the inflation in the US. So inflation is looking really sticky in US at this point of time. So it is very important that, of course, there are not going to be any rate cut or rate hike decision happening probably, but then the comments from Jerome Powell will be keenly watched, because any comments like maybe postponing the rate cuts or having extended period of high rates in US can kind of put down the market for some time. So this is the time when markets can be literally bouncy. I mean, can go up and down, all the way volatile. So it is going to be difficult situation right now, and same can be reflected. A similar situation can be reflected across the Asian market and the Indian market. So overall, this is what we can expect for this week. So no other major event this week. However, markets are going to see holidays the next week, and the next week we also have the monthly expiry. So overall, markets are going to be little, of course not little, I know. So little would be a bad word to use there. So it is going to be a really volatile period over this time. So markets can go haywire, but however, I feel the market should be taking a support somewhere close. So like I don't see a downside lower than 21,500 at this point of time. Though I know it is, I'm talking about 500 points lower from the existing level, but then I'm saying if at all there is a negative movement that happens, so 21,900 would be keenly watched. If that is broken, we could see the next important supports taken at 21,500 in Nifty. And on the higher side, if at all we take some support around this area, existing area of 29,900 to 22,000, we might see the markets trying to move up again. But however, the upside also will be limited at this point of time until the election results are out. So till June 6th, I would say the markets would be having a volatile and range bound movement is my expectation. And but again, let me tell you here, don't quote me on this. Markets can never be predicted. This is just my anticipation with my experience in the market, and I would be taking my trades based on this. Now, those were things which we have been talking about from a trader's perspective. Now, talking about an investor's perspective. So, as an investor's perspective, well, whatever party comes up in the election, it is not going to make any major difference in the market. But then, of course, the markets will definitely go up in the upcoming years in India. There are multiple reasons which we have discussed earlier for that. But then, I need to point out few important things. Now, if you see off late, the deposit levels in all the banks have actually reduced. HDFC Bank is, of course, trouble because of this, and HDFC Bank also has not been rising up in terms of share price. So, overall, deposits are down in the Indian banks. That is something very important to watch. So, when deposits are down, mutual fund industry is hitting brand new highs. Now, many people may comment, okay, yes, all the money which was going to our deposit has actually been going into a mutual fund, but no, definitely not. Mutual fund industry is very small compared to the FD and deposit industry in India at this point of time. So mutual funds, of course, will over a period of time take that over, but probably at this point of time, the FD is still higher. So why are FD deposits not coming in? And also, second important concern is that loans are increasing at to that too in the peak rate period. So in fact, like I always say, this is not the time to take a loan for home or car or whatever it is, because interest rates are at their peak. In fact, I myself am holding back from a new car purchase because the interest rates are at its peak. So I would prefer to wait and expect the interest rates to come down. In fact, for a home loan, it is still fine because it kind of works with the repo rate. So if the repo rates come down, home loan rates will come down. But most of you who go for a car purchase go for a fixed interest loan, and if the interest rate comes down in the next 1 or 2 years, you will be still stuck with the same high interest rate. So be careful on that. In fact, there are some nationalized banks which offer a repo rate based car loan. So if you can find that, that would be a great option to go for rather than going for a fixed rate of interest for your car loan. That would be something that you need to watch at this point of time. So personally, no real estate purchase or car purchase. But then yes, when do these purchases happen? So when the rate cuts happen. So now, as the markets have seen, especially if you look at India, Indian markets have seen a kind of consolidation in the inflation number. So that means inflation is still within our control. So there are chances that Indian government can go for a repo rate cut, maybe before US also. If that happens, gradually the interest rates in FD, which is coming to about 6 to 7% at this point of time, can further fall to 5 to 6%. So if you want a a short-term FD to be done, you can do that, but do consult with us before putting your money in, or do your due diligence just to make sure you're using the right amount of money to be invested and also the right kind of FD. So we are MPI Invest, which is of course a 360-degree wealth management company. We are your partners on any and every financial decision making. That could be buying a car, building a dream home, or even your vacation. And that will help you to plan all your dreams and financial goals in the right manner such that you achieve them financially. So this is what we do at MPI Invest. So of course, do connect with us at mpinvest.com and schedule a meeting or a one-to-one meeting where we charge nothing as of now. So that's something I had. Okay, I did some marketing for myself. Well, let's keep that aside, talking about markets. So this week, like I said, no major events. Markets are expected to be consolidating somewhere at this range, but technically 21,900 to be watched. If that is broken on a closing basis, day closing basis, there are high chances the market can see a breakdown. But then even if there's a breakdown, 21,500 is an important level to watch for this week. That may not be breached. So similarly, on the higher side, 22,000 of course will also try to act as a support. If it takes a good support and starts rallying up again, 22,500 would be a difficult situation. So this week we could expect a movement anything between 21,500 to 22,500. So this could be the expectation for this week for the range. But then the next week we have a shortened week plus a monthly expiry. So overall, the markets are going to be kind of volatile again. But then the best way to invest, like I always say, is SIP mode. Start investing today if you have not done it yet, because you never know the market when it can go up and go down. But if you stay invested for a longer term, definitely you're going to make money out of the market. That's my, gut feeling, because I have actually done that with my own money and many other investors in MPI family. So, well, that was about the week ahead, and we've discussed about what could be the risk with banks as well. So, with overall, I think we've covered everything that we had to discuss. But if you still have any questions regarding your financial planning, you can always put a comment in the comment section, and I could answer that for you in the next video. And also, if you want, we can have a one-to-one meeting by registering on mpinvest.com, schedule an appointment, and we could catch up for a one-to-one meeting live. So that's it for now. This is Srikanth Rajan signing off. Until we catch up with more details over the market tomorrow morning, let us see how the Asian markets open. So I am not expecting a major gap down, though Asian markets have fallen. So I would say markets could be kind of stabilized, maybe a small plus or minus, but may not be a big difference to the opening tomorrow. So with all those things, let's catch up with more details tomorrow morning. See you tomorrow. Goodbye. Have a great day. But before you leave, of course, I'm making a note of this. Do press the like button and do share the podcast with your friends. And if you're not subscribed to our channel, it's high time you did that. So go ahead and subscribe to our channel, and don't miss out on any of the investment ideas that we discuss. So goodbye. Have a great week ahead. This is Srikanth Rajan signing off until we catch up tomorrow morning for the next podcast. Goodbye.